Hello everyone. We have already started with the topic accounting for partnership business. In our last class, I had discussed and explained to you the meaning, the nature and features of a partnership form of business, the limited liability partnership form of business, the partnership deed, and the rights and duties of the partners. Today, I have taken up another topic to step a bit forward. Our today's topic, as it is on the screen, you can see, is the books of accounts prepared in partnership business. Whatever may be the form of business, financial statements are being prepared. And a part of the financial statements that are being prepared in different forms of business is the trading account. Firstly, okay, the first thing is that trading account. From the trading account, why do we prepare trading account? It is prepared to find out the gross profit or gross loss. Next is the profit and loss account. Next is your profit and loss account. And this profit and loss account is prepared at the end of the financial year to calculate or to find out the amount of net profit or net loss. Now, what to do? What to do with this net profit and net loss in case of partnership business? In case of sole trade business, you all know that after the profit and loss account, you prepare the balance sheet. But here we will stop. Friends, in case of partnership form of business, after preparing the profit and loss account, we do not prepare the balance sheet. We will not prepare the balance sheet. Here, the net profit that is being earned by the firm or the net loss that has been incurred by the firm is to be distributed, or it is to be borne by the partners. So friends, you see the account which will help us to distribute this profit, net profit and net loss that we have earned through profit and loss account. It is distributed through a special account which is known as profit and loss appropriation account. Now, profit and loss appropriation account, it is just prepared after the profit and loss account in case of partnership form of business. Now, what is the nature? What are the features, you can say, or the characteristics of this particular account? First is, it is an extension of profit and loss account. It is an extension of profit and loss account. Because in profit and loss account, we just calculate the net profit. And after we calculate the net profit, the amount of profit distribution is shown in this profit and loss account. It is nominal in nature. That is, it is a nominal account. Just like profit and loss account, it is also a nominal account. Next, it does not follow the matching principle as we follow in profit and loss account. So question arises. One question can arise from this question. What is the basic difference between profit and loss account and profit and loss appropriation account? The basic difference is that it does not follow matching principle. Matching principle is not followed by profit and loss appropriation account, but matching principle is followed to prepare profit and loss account. Next, you see, this particular account is prepared on the basis of partnership agreement, means the partnership deed. As per the partnership deed, the way it is mentioned in the partnership deed, the profit and loss appropriation account will be prepared accordingly. And lastly, it is an account which is prepared to show the distribution of profit and loss among the partners. Now friends, you can see on the board that there are two partners in a business firm. Suppose these are the two partners and this is their partnership firm. Now the partners, they are the owners, and as per the entity concept, the owner of the business and the business, they have separate legal existence. Now, you all know that whatever is earned by the firm, if you don't know it, then please get into it to your knowledge, that whatever is being earned by the firm, that is whatever profit is earned by the firm, it is distributed to the partners. Whatever profit is earned by the firm, it is distributed to the partners. So, dear students, whatever is given to the partner is expense for the firm. मतलब जो भी हम दे रहे हैं तो वो मेरा तो खर्चा हो गया ना. It's going away from me, expense. So, it is called expense for the firm and hence it is to be debited as per, because the account is nominal in nature. That is the profit and loss account, it is nominal in nature, and we are going to show the distribution of the profit earned, in the profit and loss account. Therefore, for when the firm gives any amount to the partner, so it is the firm's expense and it is to be debited. And whatever is charged to the partner, that is whatever the partner has to give to the firm, is income from the firm because something is coming in. So here this income will be credited. So friends, here in front of you, you have the profit and loss appropriation account, and it is written here for the year ended as per the financial year. Whatever financial year will be given to you, you have to write the last date, the year end. Now it has two sides, the debit side and the credit side. On the debit side and on the credit side, before you can see I have posted many entries. But before posting all these entries, the first two entries, the first, on either side, that is to PL account, net loss, and by PL account, net profit. Now from where did I get this? And why did I post it here? I have already said you that this profit and loss appropriation account is an extension of the profit and loss account. I have drawn a rough of profit and loss account. Now in the profit and loss account, the balancing figure is either net profit or net loss. It is either net profit or net loss. Now if it is net profit, it will appear on the debit side. So from the debit side, it is posted on the credit side of profit and loss appropriation account. And if it is net loss, from the credit side, it will be posted to the debit side of PL appropriation account. Now the items on the debit side, the rest of the items, the 1, 2 and 3, these 3 items, interest on capital, salary and commission, and general reserve. So first let us take these two, interest on capital and salary or commission. Now these are being the amount which is paid by the firm to the partners. That is, the firm gives it to the partners from the profit that is earned. Now in this case, when the firm is giving it to the partners, it becomes expense, so they are debited in the PL appropriation account. So they are debited in the PL appropriation account. And that's why it is posted here as to interest on capital. Say there are two partners, their amount of interest, and outer column, sum total. Again, salary or commission, whatever amount will be given to the partners as I've taken here X and Y as the partners and the total in the outer column. Now this general reserve, it is a part of the profit which is kept aside for future use, because you all know that the total profit which is earned is not utilized. A part is kept aside for future use. So to general reserve, if any part is kept aside, that is also treated as expense. And now here on the credit side, interest on drawings. Now drawings means the amount which is taken by the partners from the firm. So the partners have to give interest on drawings to the firm, and hence this interest on drawing is firm's income, and hence therefore it is credited. So it is posted here in the PL appropriation account. It is posted on the credit side. X and Y, whatever amount of interest they will pay, sum total in the outer column. Now we balance both the side. If the credit side is more than the debit side, you will get divisible profit. And this divisible profit is written as two partners capital account. The profit will be shared among the partners in the ratio given in the partnership deed or as agreed by the partners. And if it is loss, that is, if the debit side is greater than the credit side, then it will be divisible loss, which is again to be divided among the partners in the ratio. And this is transferred to the partner's capital account.
Now friends, let us come to the accounting treatment, that is the journal for the profit and loss appropriation account, because the basic of any account is journal. Now first of all, let us see what journal will be prepared for interest on capital. Now for interest on capital, first of all, interest on capital will be allowed to the partners. So interest on capital account debit to partners capital account. And the narration is interest on capital at the rate of the percentage given credited to partners. And next, this interest on capital is transferred to your profit and loss appropriation account. For that, the journal entry will be profit and loss appropriation account debit to interest on capital account.
Now this is the closing entry. This particular entry is the closing entry. Next is salary and commission. It is similar to interest on capital. Salary and commission account debit to partner's capital account. First of all, salary or commission, whatever is to be given to the partner, is to be credited to their capital account. And next, for closing this, we pass the entry profit and loss appropriation account debit to salary and commission account. Next, we have interest on drawings. Now, interest on drawings, as I have explained you earlier, that interest on drawings is income for the firm. So, but it is partners expenditure. That's why partners capital account will be debited and to interest on drawings account. Now next, the next second entry for closing is interest on drawings account debit to profit and loss appropriation account. Now the fourth or D entry, as I have mentioned here, the D entry will be to transfer reserves. Any amount that would be kept aside out of the profit for future use. Profit and loss appropriation account will be debited to general reserve. Now for the transfer of divisible profit. Now the divisible profit, if it is profit then it or loss, it will be transferred to partner's capital account. For profit and loss account, journal entry will be profit and loss account will be debited to partner's capital account or partner's current account. Now why I wrote this current account, I'll explain you in the next video. And for divisible loss, it will be partner's capital account debit or partner's current account will be debit, either any one of the two, to profit and loss appropriation account. Students, I hope this video was quite helpful to all of you. Do take down all the journal entries. Do take down
all the journal entries that are given here. It will be helpful for you in preparing the practical problems of this particular chapter.